For the last week I've been visiting customers, officials and other economists in Asia. I spent 2 days in Hong Kong and 3 days in Singapore. Of course, the most interesting thing you can do when you're in Asia is to get greater insights into China. China, of course, being arguably the largest economy in the world and having such a close trading relationship with Australia, the outlook for China is always very important. 3 things I think I learnt from my discussions around China. The first one is that there's a strong degree of confidence that China will implement a number of stimulus packages in order to stabilise the economy at the moment. Packages to stabilise credit, packages to boost infrastructure investment, and packages in some cases to boost housing. The government's also indicated tax cuts and stimulus to the banking sector. So the general feeling is that China will be successful in stabilising the somewhat disturbing rate of slowdown that we've seen in China over the course of 2018. The second big issue is around trade policy. Clearly, there is a great degree of uncertainty as to exactly how the trade negotiations with the US will finalise. No one is particularly confident there's a compromise closely in sight. But the hope of many is that China will agree to fundamental reform. And indeed, if they do agree to fundamental reform, particularly around their state-owned enterprises, around joint venture opportunities, around intellectual property transfer, if they do that, that will represent some of the most important reforms that China's had since Chairman Deng back in the 1970s. Indeed, someone said to me they thought that Donald Trump might turn out to be the greatest reformer since Deng for the Chinese economy. The final thing that we're interested in is China seems to be heading towards a current account and trade deficit, and of course the concern would be if China tried to take some direct steps to try and deal with that problem, particularly around students and around tourists. If they were, for instance, to try and slow down the growth in students and tourists that come to Australia, that would be very damaging for our economy. The general feeling, however, is that China will be prepared to continue to allow the outflow of students and tourists, and if they do move into a deficit position, they'll open up their capital markets and fund the deficit through issuance of their own currency. If you're funding a deficit through issuing your own currency, you have a much better way of stabilising your economy than if you have to fund your deficit issuing other people's currencies.